Okay, folks, welcome to Thursday Night Stock Charts Live. What we're going to talk about tonight are, of course, the weekly charts. Of course, it is only Thursday night. We always say one trading day left to go. So no matter what I make an observation about tonight, maybe it's going to be like one of the most philistine, intellectually stimulating observations that I may make in my lifetime. One trading day left to go may mean nothing. So we got to keep an open mind, right? We're going to go over chart requests. Larry, I have BTI for you. News events, economic data, some headlines that came out. What else do we have? Trades, Sam Adams beer. Actually Boston beer. We bought the common shares. Nobody wanted it. We made money on that. We both with the common stock. We also sold naked puts, which is a bullish trade. We were the casino, not the gambler. We sold the puts, generated cash flow, took profits on that trade today. And we also sold some covered calls on NUGT, booked profits there. So we have a goal of every week at the contrarian trade of trying to generate X amount in cash flow. We achieved that goal. Now we're looking out into next week. So with that, let's say hello to people. RB, hey Bob. The Facebook short worked great. Yeah, I saw the reversal on Facebook earlier. I think Facebook is gonna go lower. I wouldn't go adding to that trade just yet because I want to talk about the weekly chart of the triple Qs. I think that Facebook in and of itself looks very, very weak. It's ripe for shorts to lean into it. The only thing that hold me back from getting very bearish on Facebook is the weekly chart of the triple Qs. We're going to go over that chart in a moment. One trading day left to go. It looks bullish right now. That doesn't mean we're going to close bullish. Jody, hello. As a matter of fact, RB, we're going to go over Facebook for you as well. I'm going to put that on the list because I think that's a good chart to go over. Bob, what do you think about shorting NEO? It is on a downtrend. Okay, so we're going to talk about we can go over NEO, right? But what we want to do, I'm jotting it down. What we want to do is we want to also pay attention to what I believe is a bit of shenanigans going on. I'm going to go over, I'm going to tease it. It has to do with Charlie Munger and Alibaba. Very odd transactions going on there. So I'll do a deeper dive. I'll give to you my typical conspiracy theory as to why I think short term you may see a pop in the Chinese stocks. But we'll take a look at NEO. Maybe it is going to be a short. RB, you're welcome, sir. Anytime, of course. Okay, let's begin with economic data that was released this week. Let me share my screen. Okay, there we go. Very good. Okay, so economic data that came out this week. Mixed bag. Factory orders, a bit better than expected. Trade deficit, a lot worse than expected, but nobody cares about the trade deficit anymore. In the 1980s, this would have tanked the market. It tanked the market in 1987. ISM Services Index, beat, good thing. ADP report, beat. Tomorrow, non-farm payrolls. Now, the ADP employment report is a mixed bag in that the headline number this week beat, but the revised number from the prior week is lower. So a mixed bag. And as I mentioned, tomorrow is non-farm payrolls and initial jobless claims dropped down today. And that is about all she wrote. Tomorrow is going to be a big, big day, folks. I cannot emphasize it enough. Again, non-farm payrolls. We're going to get average hourly earnings. Very, very important. You have people that don't want to work. Employers are going to have to pay up at some point in time. It's going to have to get reflected in average hourly earnings. Let's go to comments. Franklin, hey to you, brother. Same to you. Larry, I always learn from Thursday Night Stock Charts Live. Thank you. You're very welcome. Anytime. Bob, ready to go to school. All right. Very good. Today's close suggested maybe a fake out bull trap. Fair point. I sold some covered calls this morning to collect some high premiums. On what, out of curiosity? I don't disagree with you that today's close was a bit of a disappointment for longs, but the weekly chart is the weekly charts, plural, is fairly bullish. Talon. Hey, Babu. Hey, Talon. Okay, let's go to some events. All right, so the reason why you saw a rally this week is because, I don't like this guy, McConnell. He is a rhino's rhino. Is he playing 4D chess? I haven't seen it in the past. I don't know why he would be doing it now. They're gonna bend. They kick the can down the road till December. That brings us into a Santa Claus rally. All these shareholders of stocks, they could stay long, enjoy the rally up higher. They'll probably fade it into the new year. But the street got what it wanted. They're hoping for a deal of some sort. I'm going to take you back. I bother members with this all the time, but I'm going to bring you down memory lane. Because people think that the Federal Reserve is all powerful. They're not. And it was shown that the Emperor wore no clothes back in the February through March timeframe of 2020. Right, so here we were. This is the Dow Jones. Here we were, and all the while down every other day. The Fed, they'd come out with a half-point cut on a Sunday night. Markets would rally. Next day, bomb. Right, so whatever new program they put out faltered, and the markets sold off. The only thing that brought the markets back up again was insane spending, stimmy checks, welfare spending, and they want $5 trillion of this. It's a complete rewiring of the United States of America. So we'll be a socialist utopia, just like it is over in France and over in Europe. No offense to our European followers. So they'll bend. I have zero confidence that the Republicans have any backbone whatsoever. They will bend, and the markets will rally on it. And the bond market is pricing in more concerns about a fight in December about the raising of the debt ceiling. Yields, they rebounded today, moving up higher. And you also saw a change. Last week, we had a very volatile market as well. Here, as a matter of fact, on a monthly time frame, it was the first down month in quite some time, at least on the Dow. It was a down week. Is it so strange to make the assumption that you also saw a reduction of the Federal Reserve's balance sheet last week? I don't think so. What did you see this week? We are moving up higher yet again off of last week's lows. What did the stock market do this week? It moved up higher. What is all this going to bring? More inflation. Global food prices hit fresh decade highs. Folks, I don't know what's holding gold back right now. Could it be technical? Sure. Could it be the powers that be don't want to be embarrassed to see that gold takes over the headlines and the dollar tanks, and the powers that be are saying they have to defend against why the dollar is so weak, inflation's ripping up higher, why you should be in gold and not the U.S. dollar? It could be a factor of many things. I think that a lot of it, personally, and this is probably going to be a rear view mirror validation, perhaps a year down the road. I think what it's going to be is an unwinding of shorts in the gold market using paper contracts because of Basel III changes that only took effect in this year. It's going to take a while to unwind these positions. That's why you're not seeing gold react favorably to the rise in inflation. Also, the US dollar has been fairly strong. Why? It's because Europe has been ravaged, and they're going to come out with more QE soon. So if the euro is the second largest component relative to the US dollar in the Dixie basket, why is the dollar going to drop right now? So at some point in time, there's going to be a come to Jesus moment, and the dollar is going to tank like a bag of bricks. But we're not there yet. We could be, but we're not there yet. It could happen any day. All right, this is to RB's question. Abel, thank you much for the super chat. Thank you. Appreciate that. Let's bring that up. Let me read it. Super chat. Hey, hi, Bob. Pays us in euros. Good conversion there. Thank you. Hi, Bob. Can you please kindly do technical analysis on the chart of ASML? Yeah, you're hot on ASML. Sure. You are on the list. Abel, you got it, brother. Jody, we are too big a country to be socialist. Won't work. So China's much bigger, right? Yeah, I want to say you're right. I love your optimism, and it won't work. You're right about that. But let's face it. You have vaccine passports in New York City and LA now. They're coming. I mean, if anybody thinks that the vaccinations have anything to do with the CCP virus, they're out of their minds. It's all about control. It's all about getting you to adhere, getting you customized to listen to what the government wants. And ultimately, and this is a point that was brought up earlier today by Tim Pool, who is a center-left type of guy. I listen to him on YouTube. I keep him in the background. But he brought up a good point today about Rand Paul, one of my favorite senators out there. And he said Rand Paul's kind of wrong on this. And I was about to, jump out of my seat because Rand Paul was ridiculing Fauci again, as Fauci should be ridiculed. And he brought up the fact that Rand Paul is fighting the wrong fight. He's falling into a trap. And I found his argument interesting in that Rand Paul wants Fauci to acknowledge that if you have antibodies, if you have the disease, if you've had the disease, I'm afraid to even say it with the censorship, the CCP virus, if you've had it already, at some point in time, they're going to say, you know what? Okay, you know what? We're going to put that on the vaccine passport. Just show us that you've been vaccinated or that you have antibodies. All they want is that control. And you may say, what's the big deal? What's really the big deal if we have a vaccine passport? It's just another app. That's only a portion. That's only a portion of the puzzle. That's check. If you're playing chess, that's check. Checkmate is the digital dollar. That is checkmate. So they have your vaccine passport. They know exactly where you're at. You want to go to a bar. You want to go to a club. You want to do anything. You want to be part of society. If you want your social credit score to be good, you better be reporting in. Because if you don't, the government may dox you. They may fine you, take money right out of your account. That's coming, a cashless society. Call your senator, call your member of the House of Representatives, and scream out loud. Scream. I digress. Charlie Munger to RB. and his question about NEO. We're going to take a look at NEO. We'll talk about whether or not it's a short. But Charlie Munger today, or it was announced, I guess his reporting came out. And this guy's, I think he's smarter than Warren Buffett. I've listened to Charlie Munger for many, many years. And he's very straightforward. Buffett's right-hand man. And I found it shocking. And at the end of the article, they even agreed, the writer agreed that it was a surprise that he would have any Chinese stocks. Normally, he only buys American companies. So, you know, and he's quoting here Buffett's old adage, be fearful when others are greedy and greedy when others are fearful. That assumes you have a fair market and you have price discovery. And one way to rationalize this would be, you know what, is the American market any different, really? It is, but we're going down that path of, you know, it's clown world, man. It's really, really clown world. So I find it concerning that that they're doing this. I worry about whether or not they got dirt on one of his family members or what have you, and he made this move for headlines to try to get some propaganda, trying to boost up these Chinese shares, which have found here's the NASDAQ Golden Dragon China Index, a double bottom setup. Do we rally off of here? I don't think so. I would never buy one of these stocks unless it was extremely oversold and I saw a short-term trade. I wouldn't buy it. I think this is dead money. And you have people, Blackstone, moving more of their business over there. Good luck to you. Good luck. There's going to be a day of reckoning. And I think it's already here. I think we're already seeing it. What else do we have? Okay, we'll leave this off, and then we'll go over to the weekly charts. We will be seeing another week with the Atlanta Federal Reserve bringing down forecasts for Q3 GDP. This is not good. And let's put this into perspective, right? Here. Look at all of this monetization of debt, right? What do they want to do? They want 5 trillion more. Let's say that Joe Manchin gets his way. They cap it at 1.5 trillion plus the 1.5 trillion they already passed. That's 3 trillion bucks. That's going out the window. Poof. Pixie dust. It never existed. It's gone. And what do we get for all of this money printing? The indebtedness of our children? This. GDP falling off of a cliff. This, along with inflation, is stagflation. And it's only going to get worse. So I'm not predicting a recession per se. They'll spend our way out of it before it even hits. So stagflation, no doubt about it. Let's go to the weekly charts. But first, Anthony. Hello, Anthony. Doing good, buddy. How you doing? Bob, can you do me a favor? If possible, send me the link to the monk. Yeah. Anthony, check the chat box, and that article is there for you. It's showing me it's on YouTube, Facebook, DLive, and Twitch, but not the Twitter. Am I even on Twitter right now? Yeah. Okay, cool. Hi, Twitter. All right. Let's go to the weekly charts. You got it, Anthony. Anytime, pal. Okay. So we're going to do what we normally do. We're going to begin with the bond market because the bond market is the tail that wags the stock market dog. I never want anybody to forget that. That's why we begin with bonds. Always begin with bonds. As boring as it may be, they're very, very important. And I got to tell you, The 10-year yield is a monster. In fact, we need to update this. What we're looking at here is a major inverted head and shoulders setup, which is a very, very bullish setup for the 10-year Treasury yield. Assuming that we close where we're at or higher on the week, very, very bullish. We broke out 3 weeks ago. We haven't had a retest of the breakout point yet, but man, this is extremely bullish. So what we want to do is when we observe this, we want to be intellectually honest, right? We don't want to BS each other. We want to step back and say, okay, these are the cards that we've been dealt. From now through December, we will have a market that is concerned about a debt ceiling. They will be concerned about all the spending coming down the pike. So what are yields going to do? They're going to price it in. They're going to price it in. Unless, of course, the Federal Reserve does yield curve control. They need to buy a lot more. They need to get medieval to keep yields from spiking up higher. Because once we get around that 1.8 mark, 1.8% on the 10-year yield, you're going to see tech stocks buckle. Once we get up about 2.3, you're going to see the entire stock market buckle. Even the banks, because the banks are going to trade along with the overall stock market. So at some point in time, between now and the end of the year, Powell is going to have to send a message to the market, we got you. And enough of the tapering, because he can't taper. He can't taper. Look what happened last week. They tapered a little bit. The stock market rolled over. The stock market goes in lockstep with the Federal Reserve's balance sheet. If they stop buying debt, the stock market gets real fast. Let's move on. What do we got? 40,000 headmen. Every study has shown that vaccination is twice as effective at defeating COVID than immunity acquired from previous infection. I'm not a doctor. I'm not going to argue with you. I'm not qualified, so I'll defer to whatever study you're citing. I would love to see the articles. I would love to see that. And thanks for sharing it. Okay. And I'm not anti-vax. I'm not anti-vax. This is not about anti-vax. It's anti-government. It's anti-government. Anti-government control. I'm a libertarian. So no government involvement. I'm a Reagan Republican. And Reagan Republicanism is gone, dead. These guys in Congress right now, they are not Reagan Republicans. Weekly chart, 20-year bond ETF. As you might expect, right? We have an inverted head and shoulders setup on the yield. You would expect to see the same, but the inverse on bonds. Check that box. Well, we already have my neckline. Let's extrapolate this out here. Now, the only way for this not to follow through, really, is if Jay Powell comes out and taps the market on the shoulder and says, we're good. Don't worry about it. Head and shoulders set up on bonds. All right. 10-year Treasury yield. Well, we already went over this. I don't want to get redundant. We already went over this. Just a different view. Tips. Treasury inflation protected securities. We haven't broken support. We had a good week last week. We have a continuation move up higher this week, but we faded off the highs of the week. Don't like the Stokes. As yields go up higher on the 10-year, it becomes very difficult for the tips to proceed up higher because the presumption is that those rising yields are sufficient enough to put a lid on rising inflation. But I think you can see from the headlines, especially with energy, that that's not the case. Energy just continues to go up higher. Sure, nat gas took a pause, but for the oil markets, you know, you had a conversation or a rumor that came out yesterday that the federal government was going to release some reserves onto the market. They said no today. They're not going to do that. So energy popped it back higher. Not nat gas though. Okay. The US dollar. Update that to today. All right. So the dollar had broken out last week right here. No new weekly high this week. I do look for that quite often. You'll see me on Sunday Night Futures Live. I'll set up new high, new low indicators, alerts to let me know, are we breaking down to new weekly lows or are we breaking out to new weekly highs? That way, I file it in the back of my head. Okay, if we're breaking out to new weekly highs, the probability of us closing higher is very, very high, and the inverse is true. So U.S. dollar, no new weekly high, inside week. Tomorrow, non-farm payrolls. If non-farm payrolls come out weak, expect weakness in the U.S. dollar. If non-farm payrolls come out strong tomorrow, expect strength in the U.S. dollar. RSI rising. It's at the top of a trading range, daily chart. We were down today, but this is not a horrible chart. We may have a double top here, but it's not horrible. Ultimate oscillator, definite double top here and rolling over. Not one of my favorite indicators, though. My two favorite, RSI and Stokes, looking pretty good. There is room to run higher. We did get extended last week. This week, nice consolidation. There is room to run up higher here. So while I think that there's a lot of reasons why the dollar should be declining, especially relative to gold, when you have the European markets in such turmoil, it's the lesser of two evils. So that's why you're seeing a bid under the U.S. dollar. I mean, take a look at the euro. This is the FXC. Weekly chart. Disaster area. It broke major support last week. This week, continuation breakdown. We're not going to find a bottom here until we hit the 107 mark on the FXC. So there's more downside to be had here on the euro. The VIX, weekly chart. Lots of topping action here. Bearish reversal bar on the week. One trading day left to go. A lot can happen. I spoke to members last night and the night before on Market Wrap about concerns I had. I kind of expected a rally in the markets because we were seeing, in particular on the ultimate oscillator, a bearish divergence, a lower high and lower lows, and it wasn't confirming strength on price. And sure enough, now on VIX, we have lower highs on both RSI and the Stokes. So this is not a pretty setup. Can this be salvaged? Might we put in a higher low? Sure. But as we begin to move back down below the 20 mark, it doesn't look good for the VIX. So that means strength for equities. In particular, the S&P 500. Now, here's where things get interesting. The Dow transports are up 1.82% on the week. And The transports are our canary in the coal mine for the rest of the equity market. The problem with the transports is twofold. One, we hit the upper band of resistance and we backed off. To a lesser extent, and this is not number two, daily chart, I'm going to show you number two. To a lesser extent on the weekly chart, we have very light up volume, very, very light up volume. Stokes may be breaking out on the week. We're not quite there yet because we don't know next week if we roll back over and this becomes a double top. But right now, it looks pretty good. In fact, let's memorialize it. Okay, and there we have it. So that's the transports on a weekly time frame. Up week, little bit of selling on the week, as noted by the topping tail. Where it becomes a bit more bearish, and I want you to keep in mind that the transports usually rally along with yields. So here's the 10-year yield looking like a monster, right? The transport's looking okay, daily chart. Here's where things get interesting. Bearish key reversal today. So we broke out above the 14,600 mark, only to reverse on the day. We did hold, I believe we held the 50-day moving average. 14,330. Sorry, 14,515. No, we actually closed below it. We actually closed below the 50-day moving average. That's a simple moving average. So not loving this price action here. A rejection. Volume was light, though. Stokes look really, really good. So a bit of a concern because, again, the transports are our canary in the coal mine. Dow transports. This is a weekly chart. Now, here's where things get pretty bullish. The Dow Jones looks like a monster. We are holding the 50 mark on Stokes, threatening to hook back up. Good stuff. We do not have a new weekly low, and we are well off the lows of the week, and we're just off the highs of the week. We have 3 consecutive weeks of consolidation, and we are threatening to break out. $35,000 is the line in the sand. Daily chart. Now, in a daily time frame, we broke out. We've been stuck in this trading range. We broke out above 34.5, stopped dead at 34.750, right where it intersects with this upper band of the declining downtrend channel. I know it hurts to hear, downtrend channel. So do we get a continuation breakout tomorrow? I think you need weak jobs data. You need weak jobs data. Why? Because yields will pull back, equities will get bid, and if you see a very strong number, you may see a bid on the Dow Jones because that's a lot chock full of cyclicals. I think tech stocks are going to get hammered, but I think it's going to behoove the overall equity market to get weak job numbers. I know that sounds crazy. It's sick and perverse, but that's the stock market we live in. Bob, have you went over gold stocks yet? Now, McNeil, no, not yet. We're going to talk about those in a moment because there's a lot to talk about. So Dow, looking good on a weekly time frame. questionable on a daily time frame. How was volume today? Very light. S&P 500 weekly chart. S&P, look in the bomb here. Bullish key reversal bar, one trading day left to go. We don't know if it's going to close here, so we can't position based upon where we're at current. We want to know how we're poised to close on the week. Weekly volume, light, but we can fill the gap tomorrow. Daily chart. Now, the daily chart, very similar to the Dow Jones. Right? We spiked up. They gapped it up. Right up and into the upper band of the downtrend channel. Now we have formed a megaphone formation, a declining lower band of support and a declining upper band of resistance. This is your megaphone. So the question is, do we break out or do we back off? Volume rolled in light today. Do we put in a lower high on our Stokes? Jury's out. We're at a pivotal point right now. Small caps. I think these Stokes are very, very bearish on a weekly time frame. But that being said, RSI looks very, very good. Very, very good. Price action looks very, very good. We're back at the upper range of where we've been trading for pretty much 2021. If we get strong economic data coming out tomorrow, expect strength on the small caps. Daily chart, a very strong day. We did close off the highs of the day. Stokes, a mixed bag here. I do still carry a short position here, but I'm telling you, if we get strong economic data, you see the Russell 2000 breakout, I'm covering it, and we will not be short anymore. Qs. This is a monthly chart. Let's not do a monthly chart. Weekly chart. Bullish key reversal on the week. Stokes are not looking good. Volume is very, very good. Daily chart. This price action on a daily time frame is abysmal. Folks, if you think that tech stock traders are going to ignore this, the 10-year yield, they're not. Rising yields are not good for tech stocks. So beware. Daily chart. Oh, we're already on the daily chart. Duh. Let's do this, though. We've broken out on RSI. Volume to the upside today was very light. Since the market is bottomed out, I would expect a short-term rally, even if it's today's rally. Even if today's rally is a bit more defensive, you could be right. I'm not going to argue it. I'll have more of a definitive decision after tomorrow's jobs report. Then I'll have a better feel for how we're going to close out the week. All right, let's update this. Let's get rid of this. I did not want to do that. Goodbye. Okay. The banks. Okay, so the banks are looking like a monster. Unlike the tech stocks, the bank stocks love rising yields as long as the overall equity market doesn't roll over. The other day, equities were under pressure. Yields were rising, but the banks rolled over with the markets. So if the markets trade sideways with a bias to the upside, bank stocks are going to outperform along with energy, as long as yields head up higher. So far on the week, bank stocks, they were on our watch list going into this week. I haven't pulled the trigger yet, but we are very, very close to getting long of the banks. I'll be sending out alerts to members. Daily chart of the banks. They gapped them up higher, up and into resistance on volume that was about average. The indicators look very good here. If we get strong jobs data tomorrow and the Dow Jones and the S&P take it like a man and they don't sell off because of concerns about rising yields, the bank stocks will probably break out. So members, expect an alert fairly soon on the banks. Technology. Weekly chart up over a half percentage point. Daily chart. They gapped it up higher today, even with rising yields. That makes it suspect to me. Volume is good. Let's see how they close them. 15-minute chart. Not a good close. So here's that rip. They want to get everybody excited. This is what they do in the morning. They paint the tape green, rip, fade. Paint the tape green, rip, fade. Rinse, wash, repeat. The semis. Weekly chart. They broke support last week. They're trying to recapture support this week. No luck yet. Volume light. Daily chart. A gap up higher. I'm not a believer in V-shaped recoveries on stocks like this. You got to get a pullback and a higher low or a retest of the prior low. It doesn't have to be exact, but ideally it's a higher low. Volume was very light today. I think this is a short covering rally. I think a lot of what we saw today was a short covering rally based upon foolishness out of Washington. LABU weekly chart. This is the biotech ETF. Not looking good. Down in the week. Not much to talk about here. Daily chart. Nothing sexy here. Avoid. Consumer discretionaries, oddly strong. Volume, very, very good. Bullish key reversal bar on the week. Daily chart. You know, they gapped them up higher on a bullish key reversal bar from yesterday. No great shock. Do we break out? See, at times like this, you got to ask yourself the question, as we near that prior high, because that's where the test is. The test is always at the top. Do we break out or do we put in a lower high and roll over and put in lower lows? So that's the $800,000 question right now. Energy. Monster. You know, yeah, we hit resistance. We may consolidate for a while, but I think ultimately we're breaking out a lot higher on energy stocks. Daily chart. I mean, this chart here, it wants to go higher. Energy wants to go higher. You just seen some profit taking. Very good chart. Natural gas, still up on the week. You know, yeah, it's come off of its highs, and it's very overbought. It's about as overbought as it was last week when we spoke about it last. RSI 84.11. You know, I think it goes higher. The Russians took a little bit of froth off of the price, but I think the Russians they're gonna play with the Europeans like a cat with a cornered mouse. They've done it in the past. They're going to keep shutting off supply, showing who's boss, and they're going to get those Europeans in line. Daily chart. Bullish key reversal bar on the day. This may have been our bottom today on Boyle or nat gas. This is a leveraged ETF putting along of nat gas. Very nice chart. Good volume today. Really good volume. How do we close? Meh. Not a lot of buying into the close. But the daily chart looks good. Oil weekly chart. Folks, we're at multi-year highs. And we're going higher. Daily chart. Man, outside reversal bar or bullish engulfing, whatever you want to call it, doesn't matter. It's going up higher. Look at the volume. Crazy. Emerging markets, weekly chart. Bullish key reversal bar. As long as the dollar stays strong, I don't want to be involved with emerging markets yet. They'll have their time, but the dollar's got to break. Volume light. Let's talk about gold. So gold has every reason in the world to go up higher, but it's politicized. So what we're doing here is we're watching the monthly chart of gold, which still, using the Stokes anyway, is still in a corrective phase. And we remain, though, in a very tight and tightening trading range. Case in point, while our stochastics still show that gold is losing momentum or losing interest, the price action is not validating it, meaning it really began here back in July, where we didn't get a follow-through to this very bearish candlestick in June. Yes, in August, very, very volatile, but we reversed to close up on the month, bullish. Last month, no new monthly low, down month, yes, corrective phase. This month so far, no new monthly low. Gold hasn't done much except consolidate. This chart here is a monster cup with handle formation. And once we begin to break out above 1810 and close there in a monthly time frame, I think we're going to new all-time highs like that. It's going to happen overnight. Not literally, but it's going to feel like it happened overnight. So for those that are watching now, that are watching us on the replay a year from now because of the power of technology, I think that you're watching this video at a much higher price than where it's trading at current, which is at 1759 spot 20. Drilling down to a weekly chart. We broke out on a weekly time frame the week of October. This is a daily chart. Hold on. Duh. I was wondering why it looks so tight. Weekly chart. Okay. We broke out. You know what? I'm not going to say we broke out. Let's say we're at a breakout point. We haven't broken out yet. We need a big burst of buying. Our Stokes are breaking out. They are putting in higher lows. Talon, my wife just left to go shopping, so fact that anti-year consumers. Very good. Hope she's not watching. You'll be in trouble. Tom Lowe, 1970 style for gold, and 1670 is needed for latest test. Nah, I don't think we're going down that low. Maybe you're right, for all I know. Maybe you're right. I don't want to sell hopium here. Maybe you're right. But I think we're a lot closer to probably breaking out than we are to breaking down. That would be a pretty significant breakdown. So the weekly chart looking very good. Daily chart. We've broken out of a triangle formation. Lots of consolidation here. Stokes back above 50. RSI stalling a little bit. But here's the anomaly. I find it fascinating. The mining stocks. We'll go with the GDXJ monthly chart. No new monthly low. We held the rising 50-period moving average back to the weekly chart. At current, with one trading day left to go, we have a major breakout back above not only resistance, but also the 200-week moving average. RSI, higher low. Stokes, higher low. Daily chart. Nice move up higher. How much are we up this week so far? Up over 4 3/4%. On Nugget, we are up. This is a leveraged ETF putting along of the senior miners. We're up nearly 7.5% on the week. Keep in mind, this is a 2 times leveraged ETF, so to put things into context. What's fascinating about the price action this week is that we're up so significantly with yields very high, moving up higher at the highs of the week. The dollar up on the week, breaking out. Normally, they trade inversely. And I presume that ultimately they're going to resume that inverse correlation. But as it stands right now, what I'm concluding is that traders are saying, okay, gold is definitely setting up here for a move up higher. So if I want wealth preservation, I'll buy gold. If I want to preserve the buying power of my US dollars, I'll move it into gold. If you want wealth creation during a time of inflation, weak US dollar, and rising gold, you want to be in the gold mining stocks. And they are showing up very, very favorably. I mean, if you draw a correlation between the 10-year yield, we'll make that black, and the US dollar, we'll make that green, very apropos. You can see that the inverse relationship is, I mean, it's night and day. They just don't normally trade in tandem unless, of course, you have a geopolitical event, terrorist attack, whatever, something like that, where you have a flight to safety. So the dollar, bonds, well, not that wouldn't help bond yields, but the dollar anyway, because yields would get driven down with a flight to safety into bonds. But you can see the inverse relationship. And when you take a look at a daily chart, These inverse correlations are now improving. They're hooking up. So what I believe this to be is not a new paradigm where the dollar is going to trade along with the gold mining stocks and gold. No. That's not going to happen. Not for any length of time. Yields, however, traded along with gold for much of the 70s into the 1980s because the Federal Reserve was behind the curve. Once the markets sniff out that the Federal Reserve is full of crap, they're not going to make a move, and they realize that even if they hiked rates tomorrow, it's too late. You're going to see bond yields rip up higher, gold along with it. The dollar is going to tank like this. You're going to see selling of bonds, selling of the U.S. dollar. That's how you know it's game over for this socialist utopia that we're developing here in the United States. So that's my story. I think if there's stealth accumulation on the gold mining stocks, if I overlaid the same correlations, gold and the yields in the U.S. dollar on NUGT, it looked the same. I'm not going to bore you, but these ETFs are looking rock solid. As for the silver miners, no difference here. Silver miners, bullish reversal bar on the week, possibly breaking out, one trading day left to go. Daily chart. We have a breakout. This is beautiful, bright price action, man. Again, think about it. Dollar up, yields up. Normally doesn't happen this way. Silver miners up. There's stealth accumulation going on here. The powers that be know what's coming down the pike. These stocks are on sale. They're printing money right now, not to mention what they have in the ground and they haven't brought up yet. And their balance sheets, unlike prior times, the balance sheets of these mining stocks are pristine. Silver, weekly chart, up on the week. Again, bucking the trend on the dollar in yields. Daily chart. Sad day. I thought we were going to get more of a boost up higher on silver. It didn't happen, though. So boo-hoo for me. We're long of these names. We're long of the silver miners, gold miners, silver. We're long of energy, food, and some crypto vis-a-vis Coinbase, which is doing really good this week. What are we up this week? Up over 8.75%. And we're probably going up higher. So Coinbase looking good. All right, let's go to some chart requests. I think PHYS is the best place. As soon as you hold 75,000 shares, you can redeem. Is that Sprott? Oops, sorry, I hit the mic. I hope I didn't make a noise there. Yeah. Sprott is very, very good. I really like Sprott. They hold the underlying gold, and they have a uranium fund now too. So really, really good fund. Unlike the GDX or the GDXJ, they don't necessarily have, the GLD, not the GD, not the GL, not the mining stocks, the GLD. They don't necessarily own all of that physical gold. So you could see a run on the GLD if there's a shortage of gold. Not the case with Sprott. Am I accurate on that, Tom? You going to validate that? Let's do some chart requests. Folks, I want to send a shout out to our sponsor over at TrendSpider. Automate your trunk work. Automate your grunt work. Speed up your technical analysis by using automation. Automated trend lines. What else do they have here? Find winning chart setups with their scanners. Time your trades with precision using their trade alerts. I'm going to be using them tonight. Use our discount code below. If you're watching this on YouTube, 35CON. If you're watching on Twitter, use the drop-down link that I have up in my bio, and you get taken over to their website. Again, use our discount code 35CON. Automate your trend line grunt work, folks, by using their automated trend lines. I got to get a script ready so I can promote this better. Go over to their website, take a tour, 7-day free trial offer. We give it away free to our silver and gold level memberships. Let's go to our chart request. First request up tonight, BTI for Larry. Tom, yes, then PSOV for silver. Good point. Yes. And they have the uranium fund out now too, right? Okay, good. We went over that. Good. Okay, BTI. Oh, you like the stock. We've gone over this before. I don't like the new weekly low. We're down on the week. I like it down here. Let me give you a number. At around 32.50, because this is a declining downtrend line, around 32.50. And we're good to go. Let's check out the seasonality. October, a very favorable month. This goes back 19 years. November, a bit weak, but it bounces back in December, and that's a very seasonably favorable period of time, December through February. So it's an interesting play. Technically, if we come down to support, it is also interesting from a seasonality perspective as well. I'll share this chart with you. Okay. I see a bunch of requests coming in for chart requests. We'll be going till we're due. I'm not going to have time. I'm going to go over our members' requests and Abel with the super chat. That's all we have time for. If you're a member, I would do it all night long. Daily chart. Yeah, Larry, I think you're going to break here. And that's a good thing. So watch that support level on a daily time frame. It's showing it around 82.76, but again, it's declining. And I was thinking that, Franklin. Yeah. Yeah, let's find out what that is. I know it's here. Where the hell? Oh, here it is. 8.6%. Yeah. And you get it down at that support level, you're going to be over a 9 handle on a dividend yield. Very, very nice. This is very interesting to me. What else do we have here? Where's our ROE? Double-digit ROE, respectable. Okay. So BTI looking interesting. We're going to keep this on our watch list, BTI, because we have an inflation portfolio and a trading portfolio. Our inflation portfolio, energy, lots of gold stocks, lots of silver stocks, and we have food stocks. So we could use a staple, or not a staple, defensive play with a big fat dividend yield. BTI looks very interesting. More to come on that. Facebook. All right, so Facebook is a disaster area. You have both the Republicans and the Democrats with their knives out for different reasons. They're going to say it's for the kids. It's all you heard about in the hearings. It's for the kids. They don't give a rat's ass about kids. Anyway, outside reversal bar today, we were higher, closed lower at resistance. I think that this is a dead cat bounce, a bear flag, and that we're going to ultimately break. The only fly in the ointment on that commentary that I have is that the Qs look like they're ready to break out. However, one trading day left to go. Let's see if yields surge. If yield surges, then it's going to cause a problem for the Qs, therefore for Facebook and anything tech. See how it's poised to close out the week? Yeah. Stuck at resistance. What I want to know is this time next week, or tomorrow for that matter, I want to create an alert. Do we break through? In short, do we get a continuation breakdown? And we will short at will. And our alert is set. We're good to go. Let's take a quick peek at seasonality. Going back 9 years. This is not a seasonally favorable period of time. It gets a bit better in November, but December is the second worst of the year, with February being the worst. So from a short perspective, Facebook looking very attractive. I'm upset about Facebook. I have a young daughter. Believe me, Jody, I'm with you. I think there's every reason to be upset. I'm just saying that you have politicians, whether they be Democrat, Republican, they're just simply virtue signaling. They want control of Facebook. They want that megaphone, if you will. So they're going to say it's in the name of the children, but you know it's not. It's simply not. So I get what you're saying, though. I don't like what they're doing either. I mean, if half of what that lady said is true in front of Congress, she's right. They're morally bankrupt. So Facebook looking a mess here, and it's probably going lower. When you have bipartisanship and they're coming after you, the wheels of justice Move slowly, but grind finely. Neo. All right, so remember my conspiracy theory. Charlie Munger, of all people, this guy is stodgy as smart as heck, but real stodgy, very conservative. Yet he's going to go buying Alibaba, and the communist Chinese are his senior partner. I don't buy it. There's something up with this. There's something very, very wrong. So, and notice how it's Charlie Munger and not Berkshire Hathaway. What do they have on poor Charlie Munger? I think that it's a CCP looking to reflate their stocks over here so they could rob more money in the future. So I wouldn't buy any of this propaganda whatsoever. But the weekly chart does look good here. We're not going to talk badly about a chart that looks good. Bullish key reversal bar. Might we rally? Sure. Will we participate? I highly doubt it. Daily chart. Stokes hooking up, RSI hooking up. And we broke out. Let's clear off all of these. Good. Okay. We broke out today on a daily time frame. Watch for a retest of around 35.50 tomorrow. And that'll be a good place to enter if you're definitely going to get long. Last one up, ASML for Able. So the last time we spoke about this, I was not bullish on it whatsoever because we had broken down with a bearish key reversal bar last month. This month, we do have a continuation move lower. Weekly chart. You got a lot of resistance up here, Larry. Oh, Able, sorry, Able. A lot of resistance to get through. Good volume on the week. I wouldn't be a buyer here. Daily chart. I don't see the setup. You know, you had some short covering rally here. The indicator's going in the right direction. We haven't put in a lower high, excuse me, a higher low. Doug, getting tired. A higher low. This is not a sound base from which to buy out of. I would also be concerned about tomorrow, the spike in yields. If that continues, tech stocks are not going to do well. So be very, very careful. Let's check out seasonality. October is a meh month. It's usually up. November, not so much. I would be careful with this one. And with that, folks, thanks for joining in. And I really, really appreciate the generosity of your time, your promotion of the channel. It really helps me out a lot. If you could like, subscribe, follow on Twitter, wherever you watch us. Now we're on Facebook. We're simulcasting all over the interweb. So thanks for being here. Have a profitable trading day tomorrow. A great weekend. Be well.